good morning, afternoon, and evening to everyone. So my name is Sulita Lovu from the Alliance for Financial Inclusion, and I would like to warmly welcome you today in our webinar on facilitating MSME sustainability and viability during pandemic of COVID-19 experience from the African region. Bonjour et bonsoir à toutes et à tous. Mon nom est Sulita Lovu de l'Alliance pour l'inclusion financière et je vous souhaite la bienvenue à notre webinaire d'aujourd'hui sur faciliter la durabilité et la viabilité des MPME durant la pandémie COVID-19, expérience de la région africaine. Dear participants, the COVID-19 pandemic has and will continue to have a negative effect on MSMEs, mostly in the developing world. Today's discussion will focus on regulatory and market solutions.
Vamos falar sobre soluções para mercado, o impacto da COVID-19.
Sur l'impact de la COVID-19 sur les MPME et aussi sur
African region. Thank you so much for your attention. And now I would like to invite Mr. Norbert Mumba, AFI Deputy Executive Director, for the opening remark. Mr. Mumba, the floor is yours. Thank you.
Thank you very much, Sulita and colleagues, ladies and gentlemen. Let me start by acknowledging the presence of the experts and members from the Africa region, the partners that are with us today and also who are facilitating this particular webinar, and also my colleagues in AFI for continuously and sustainably putting up these webinars for us to be able to progress in the financial inclusion space. So I'm happy to welcome all of you to this webinar on the theme facilitating MSME sustainability and viability during the COVID-19 pandemic. This is with specific experience from the Africa region. First of all, again, I take the opportunity to welcome you all and members and partners participating for making time to attend this webinar. As you are aware, peer learning is at the core of the AFI services, and today's webinar will allow members to exchange experiences on policy responses to the pandemic with a view to fine-tune their own policies within their national jurisdictions. Today, I am pleased to also thank and indeed welcome the MasterCard Foundation, who have officially become a partner for AFI since June this year to support AFI's COVID-19 policy response program in Africa to enable a speedy economic recovery process following the global pandemic. This webinar is supported under this partnership, and we are delighted to have Ms. Natalia Gabale, Head West, Central, and North Africa of the MasterCard Foundation as one of the speakers in the panel today. I also wish to take the opportunity to welcome Vodacom, a South African mobile communications and mobile finance company, which is headquartered in South Africa and is servicing more than 116 customers. This includes Safaricom, for joining the AFI Public-Private Dialogue Platform as our newest regional PPD partner in Africa and the Arab region. We look forward, obviously, to engaging with Vodacom on a number of technical topics that are relevant to our members and in AFPI globally. Ladies and gentlemen, it is common knowledge that the impact of the pandemic is devastating on many economies in Africa and indeed the MENA region, that both national and regional GDP is expected to substantially decline, with some businesses also expected to close permanently. Representing more than 70% of global employment and 50% of GDP, micro, small, and medium enterprises, or commonly referred as MSMEs, particularly women-led MSMEs, are being hit the hardest by the fallout of the pandemic. Some direct effects include distorting business continuity, lower revenues, reduced demand for orders, and cash flow shortages. In Africa, in particular, the consequences of the disruption of economic activity are further compounded by the fact that the continent has an informal economy that accounts for around 86% of total employment, of which mostly are women and youth. In many African countries, as you know, governments already foresee a major decline in economic activity with gross forecasts halved. The IMF forecasts a recession of 1.6% in sub-Saharan Africa this year, compared to a growth rate of 3.1% last year. In this situation, controlling the pandemic, sustaining businesses, and maintaining workers' income are therefore essential and priority for most of our members. In designing interventions that will enhance business survival and revival, will be the key focus for most of AFI members. However, in designing and implementing policy interventions, we need to ensure that the measures taken recognize the need for important financial services to be accessible to those that need it the most. Policy design should respond to the needs of youth, women, and other vulnerable segments. Policy design must remove all impediments that make it difficult for these segments to access and use financial services. Policy design must leverage appropriate financial technology that enables access at scale, that is user-friendly, and that is expended at reasonable cost, especially for MSMEs, as these are critical for the recovery phase. As you are aware, ladies and gentlemen, our discussion today will be focusing on policy and industry perspectives to enhance MSME sustainability and viability during, during the COVID-19 pandemic. Deliberation will be around the impact of COVID-19 to MSMEs, including women-led MSMEs and youth. Regulators' support for MSMEs sustainability during the COVID-19 recovery phase, particularly skewed to the Africa context. You will recall, ladies and gentlemen, that COVID-19 again reminds us that the measures we take should be a living policy at both the macro and micro levels, with consistent and complementary goals backed by solid monitoring so that they can be maintained, adjusted, or phased out as appropriate. We see that during this pandemic, exit strategies from some of the emergency measures taken to stabilize economies are equally going to be key to ensure sustainability of financial service providers as the world recovers from the effects of the pandemic. MSMEs require interventions at different phases as the repercussions varies at emergency, mitigation, and post-pandemic stages. Firms' most urgent requirement, therefore, is to sustain its access, is to sustenance, and as well as access finance and reduce operating costs. These critical needs can be supported with measures such as emergency interest-free loans, cash grants, and suspending or deferring payments of fixed operating costs. However, these are short-term measures, and the key for surviving the current and future crisis is through digital transformation. Digitalization, therefore, will increase MSME productivities, reduce cost, and help avoid a complete economic halt for MSMEs during the COVID-19 crisis. Many MSMEs have implemented an innovative contactless method of delivering their products and services, again demonstrating their ability to change their business models to stay afloat. Other essential measures to be taken include a solid, coordinated, and gender-sensitive strategy involving monetary and financial sector policies and private banks' participation. In addition, the youth need new mechanisms to facilitate investment in income-generating activities and improve their resilience in the face of financial shocks. Technology will more easily appeal to this segment in their accessing financial services they need to survive and to continue to contribute both at national and regional levels. This calls for collaboration by all players, be they regulators, financial sector providers, and also financial services enabler in the development and implementation of policy measures. The information on all this in terms of the interventions that have been implemented by regulators in our network is available for you to see on the COVID response dashboard, the link which will be provided by my colleagues. I hope this webinar therefore provides a unique opportunity to directly share and learn from the best practices of AFPI members and private sectors, key lessons and industry trends in mitigating the impact of COVID-19 to sustain and strengthen MSMEs during this crisis. On this note, it remains for me to really thank MasterCard Foundation, Vodacom, my colleagues at AFI, and all the speakers and facilitators today. I'll leave you at this stage to take forward your discussions and wish you fruitful deliberations. Thank you.
Thank you very much, Mr. Mumba, for these very insightful opening remarks. And now I would like to bring you through the agenda of today very quickly. So we just had the opportunity to listen to the opening remarks and introduction. We will now move to the theme setting by Judith Obolzer from Vodacom Group. This will be followed by a very quick polling exercise to set the scene and also to understand a bit more from our participants, which were the interventions taken on the topic as of today. We will then go deeper into the panel discussion. We now are very lucky to invite 4 panelists to our webinar today from Bank of Tanzania, Central Bank of Eswatini, Finca Impact Finance, and MasterCard Foundation. The panel discussion will be moderated by Mr. Nick Cameroon from AFI. We will then have 20 minutes of open Q&A from the floor. So please, once again, don't hesitate to use the Q&A function, but also the chat at any time of the presentation, and we will then make sure we take this into account during the open Q&A session. Finally, we'll have a few minutes of closing remarks. So thank you again, everyone, for your participation. And now allow me to introduce our panel discussion moderator, Mr. Nick Cameroon, Senior Policy Manager, SME Finance for the Alliance for Financial Inclusion. Nick, the floor is yours.
Thank you so much, Sulita. So, Assalamualaikum and a very good day to all distinguished participants and member panelists. Allow me to first welcome to today's webinar on facilitating MSME sustainability and viability during pandemic COVID-19 experience from the Africa region. Distinguished members and also panelists. Before we proceed with other deliberations, let me invite Ms. Judith Obolzer, Managing Executive for Public Policy, Vodacom Group, to set the theme for today's panel. And over to you, Judith.
Thank you very much, Nick. Thank you very much, Sulita. A warm welcome, everyone. I do hope my internet connection holds, so fingers crossed. I'm in a very remote rural area in South Africa, but it shows that we can still be well connected. So first of all, let me extend the thanks for arranging today's very topical and important technical webinar. I would also like to extend my thanks to Afi and the whole team for accepting Vodacom as a new regional PPD member. It's indeed a great honor and my absolute pleasure to be here today, and we are very much looking forward as Vodacom to our deepened collaboration and many more fruitful exchanges like the one that we will be having today. If we look at where we're standing at this moment of time, I believe it's not an exaggeration if I say that we have the unique opportunity to rebuild our future, and for the better or worse, COVID-19 has been an accelerator of this. If we could move to slide 1, that would be great. In line with today's discussion topic of this webinar, we all know, and it has been highlighted in the introduction, that micro, small, and medium enterprises are critical to Africa's economic life. And it is my strong belief that if we manage to support and equip the women and men that are driving these businesses throughout this critical period, we will together build a more resilient, inclusive, prosperous economy. It is very clear that we need to act now in a decisive way, considering the impact that the pandemic has and had on micro, small, and medium enterprises, with many at the brink of making ends meet today, as highlighted on the slides. The pandemic has vastly accelerated the adoption of digital technology, be that digitizing healthcare services, making online education content more freely available, or providing digital welfare and emergency payments. We can now use this progress as a springboard supporting MSMEs if we invest and make these digital solutions and digital infrastructure permanent and universally available. If we could move to slide 2, please. M-Pesa and other mobile money solutions, which are widely available today across the African region, support a huge ecosystem of MSMEs that can help and are already helping mitigating the COVID-19 impact, and have supported contactless business facilitation. And I'm sure many on the call, be that in Tanzania and Mozambique, have benefited from this business facilitation. Looking at the payment ecosystem today, MSMEs have wide-ranging needs. And to be honest, maybe we need to understand them even better, in particular in the payment space. In the payment space, they need financial services, financial management, and then, of course, various payment solutions. And I hope this technical webinar will give us an opportunity to discuss some of these solutions already available. Most critically, at this point, they need to sustain themselves, meaning access to working capital and credit is pivotal. Insurance targeted as MSMEs specifically are also critical for supporting their future resilience to economic shocks. The good news is that market solutions are available today, and innovation through mobile money can meet MSMEs' evolving needs and accelerate economic recovery. As we stand here today, regulatory and political support will be critical, and I know that API members are passionate about this, and I hope that this technical webinar will also go a long way in discussing innovative solutions of how we can grow and meet this challenge that we are facing. If we together ensure a conducive environment for investment and innovation, we will set the right trajectory for MSMEs going forward. If we can please move to the next and last slide. So today's webinar will hopefully contribute to defining and hearing about solutions. We need to ask ourselves some tough questions, and these are not new questions, but I think it is with a new urgency that we need to define answers. How can we accelerate access to grants, loans, and guarantees to really close the gaping credit gap that exists? How can we accelerate efforts to help MSMEs to go digital through public-private partnerships? And there are great examples out there that we can utilize and build on. How can we minimize barriers to digital trade, move away from data localization policies towards regional Pan-African agreements and proportionate data accessibility and protection? How can we support sustainable, open, and inclusive supply chains going forward? I strongly believe that this year we have seen just how much we can achieve when business, governments, and civil society share a clear and urgent goal. Now we must normalize this spirit of cooperation, and I'm very confident and very much looking forward within the AFRI network and wishing us a fruitful discussion for today's webinar. Thank you very much.
Thank you, Judith. You rightly pointed out it is timely to facilitate the need of country's backbone, which is MSME. And you also mentioned about the three main things about something which is not new, but it's a requirement now, which is access to finance or capital, digitalization, and also the element of sustainability. So without further ado, can we have the polling, Sulita, to start on our discussions? Yes, the first polling questions. Can we have the questions now, Sunita? It's coming. So this, okay. The first questions, we have three questions. Do you see any scope for using the and potentially existing green financing policy and initiative for MSME as part of the COVID-19 recovery? So this is basically to incorporate or to infuse the element of green when it comes to initiative for COVID-19 and also ensuring sustainability. Okay. Oh, okay. All right. We have 45 seconds more. Okay. Coming to the second questions. So all the result of this question will be shared with you later of a discussion. Okay, second, do you see any scope for using and potentially existing, but okay, which regulatory and policy intervention were implemented to support the sustainability and viability of MSME amidst of this pandemic in your country? So you can have more than one choice. So fiscal packages, monetary, structural, and exchange rate and balance of payment. So structural policy is basically something which is like using mobile money, putting up more infra for mobile money or mobile payment. Oh, you can see a lot on fiscal and monetary. Okay. Very interesting. Not much on the exchange rate, I guess. Okay. Okay. Maybe we can have the third questions. Okay. So the final questions, have policy interventions by government and central banks in the region reach MSME, women-led MSME, and youth MSME specifically? Should there be a specific policy, you think, or there should be more on a generic without any target policy? You can see the result from here. Okay. We have a few more seconds. Okay, so we end on our polling now. So we will share the result later out of all the 3 questions. Thank you, Sulita. Okay. Assalamualaikum and a very good day to all distinguished participants and member panelists. Allow me to welcome all of you again to today's webinar on facilitating MSME sustainability and viability again. So distinguished member, before we proceed with our deliberations, let me invite the panelists for today. Today, we have lined up the prestigious panelists to deliberate on the impact of COVID-19 to MSME, including women-led MSME and youth of Africa member institution and regulatory and market support and solutions skewed toward Africa context at the emergency and mitigation stage of the pandemic. So please welcome the first panelist, Mr. Revelian Felix, Manager Credit Guarantee Scheme, Bank of Tanzania. Mr. Revelian joined the Bank of Tanzania since 1986. Prior to that, he held several positions within the bank as head of financial market, head of domestic market, and board member of Dar es Salaam Stock Exchange. Our second regulator sitting in our panel today is Mr. Gcina Patrick Zumolo, Principal Development Officer, Central Bank of Eswatini. Mr. Gcina is a credit guarantee specialist, currently heading the Development Finance Divisions and manages 2 credit guarantee schemes. He has been in the financial services industry for over than 29 years. To balance our discussion, for the market perspective, allow me to welcome our third panelist, Miss Nathalie Akon-Gabala, Regional Head, West, Central and North Africa, Mastercard Foundation. Miss Nathalie leads the delivery of Foundation's Young Africa Work Strategy in Ghana and Senegal. She has over 24 years of industry experience and was recently named as one of the 100 most influential women in Africa by Advanced Media in the 2020 rankings. Last but not least, I would like also invite Ms. Karen Robb, Vice President and Chief Operating Officer, Finca Impact Finance. Ms. Robb responsible for overseeing the financial performance of FIF network of 20 community-based bank and microfinance institutions and the integrations of digital technology into its core banking practices. She has more than 18 years of experience in the field of financial services, microfinance, and fintech. So we have a very impressive lineup for our discussion today. So without further ado, let's get started with the first questions on the impact of COVID-19 to MSME. As we understand, the impact may differ across country and depends on the phase of the pandemic, from distorting business continuity, lower revenues, and the impact of cash flow shortages, among others. Also, we want to know what are the policy interventions from regulator and market support from financial service providers and also stakeholders in mitigating this impact to MSME, which include women-led MSME and youth MSME. So for regulators, Gcina and Revelian, we can focus on the 4 main buckets, which is like fiscal, monetary and structural and balance of payment, and also how would we find the right balance between these two main elements, you know, because now we are in the midst of like putting the balance between health and economy. And for Mastercard Foundation, maybe Natalie, you want to highlight on the Nokuso program in Ghana and other interventions like Young Africa Work Strategy. And for Finca, you can also touch on how this crisis affecting repayment capacity for customers like MSME and women-led MSME, and how MFI stepping into the support the affected segment. So we can start with Gcina, Revelian, and followed by Natalie and Karen. Over to you, Revelian.
Hello?
Yes, we can hear you, Revelian.
Thank you, Nikki. And good evening to everyone. On our part, it is around 4 p.m. Nikki, I do thank you for organizing such event. And as you have directed, I will try to explain or share our experience in Tanzania regarding the measures which were taken after having COVID-19. As far as we know, the police measures or the physical measures which were taken will differ from one country to another, depending on the geographical area and the setup of the country. So on the part of Tanzania, the Bank of Tanzania was mandated to coordinate every policy issues and actions which should be taken by the government to address the COVID-19 pandemic in the area of safeguarding the financial sector stability, and also to make sure that financial intermediation process continue to prevail within the country. So several measures were approved and implemented in our market, but lucky enough, our decision or our action which were implemented will diverge slightly from going specific to MSMEs as the theme tried to be addressed today. On our part in Tanzania, the government and the BOT approved lowering of statutory minimum reserve requirement. This is the amount of cash which is held at the central bank by the commercial banks. So there was a decision to reduce or to lower the SMR requirement from 7% to 6% in order to provide additional liquidity to the banks, of which the amount was around 215 billion. The essence of doing that was try to provide liquidity to commercial banks. This is maybe it was a short and long-term approach, since the measure or the outcome cannot be emphasized now to say, okay, it is true that every action under that scenario benefited the SMEs to what extent, because the time allowed or the time which we provided that facilities is only about 3 months ago.
Mm-hmm.
Also, I wish to share with you that there was a decision to reduce the discount rate from 7% to 5%. The intention was to provide additional space for banks to borrow from the central bank. And our expectation was that after the banks have borrowed from the central bank at the lower rate, we expected the commercial banks to extend the loan at the lower lending rate, or to reduce the lending rate to their customer under that process, of which we know that some of the customers were facing COVID impact in terms of not doing business, in terms of not accessing the market. Also, under the same scenario, there was a decision to reduce the haircuts on government securities. We know for sure that commercial banks, once they want to borrow from the central bank, they have to pledge the collaterals. So there was a decision to lower it from 10% to 5% for treasury bill, also from 40% to 20% for treasury bonds. That also was to allow commercial banks to borrow from the central bank with a less collateral when you compare with the previous stance, which was the rate was higher.
Right.
Also, this was in the conjunction or intention to make sure that the commercial banks or financial institution will be able to have sufficient liquidity to extend to the market.
Mm.
Also, the central bank considered that it was the right time to be flexible on certain regulatory requirements after having a discussion with the commercial bank that, okay, commercial bank, you have to sit down with your customers and assess or have a feel of what your customers suffered from the COVID-19 so that you can rearrange or you can come up with another option where you can reschedule or you can restructure your loan within the prescribed limit of where the bank was ready to attend, but it will depend on individual basis. It was not a blanket approval. Every sector was affected, but at a different level. So we expected the commercial bank to have an access to discuss with their customers and they come up with the proposal or options which the bank was ready to accommodate.
Mm. Thank you.
Also, the commercial bank, the central bank, it has a discussion with the mobile money operators in order to make sure that customers were able to access or were able to continue their business. There was a room or approval for mobile network operators to increase the daily transactions, which was moved from 3 million Tanzania shillings up to 5 million Tanzania shillings. Also, the daily balance was increased from 5 million Tanzania shillings up to 10 million Tanzania shillings. The move was to make sure that customers were able or could move to digital services payments platform, which was also in line with the Earth recommendation that there was no need to have a congestion to the banking or to access financial services. In terms of physical decisions from the government, there was a reallocation or there was a need to support health sector due to pandemic areas of which the government reallocated some fund to make sure there is the facilities, medicine to the centers of which we believe it has an implication or an impact to the MSMEs or some other sectors.
Okay.
Also, there was a speed up to make sure there is a payment of arrears so that customers or borrowers which were having supplies with the government, they were able to be repaid their arrears so that they cannot go solvent, so the business should not close out because they are not able to pay taxes to the government. Also, we encouraged the government to expedite a tax refund for those who were on that bracket.
Mm. Thank you so much, Revelian. I think
yes.
We have a good kind of mix between monetary and also fiscal interventions. So just hold some thought from your end also, because we want also to infuse some other intervention, maybe from regulator also, from Gcina. Can I have also Gcina? Do you have any comment on the intervention that Central Bank of Eswatini has made on the ground?
Good evening, good afternoon. Thank you, Nick. I think Felix has touched on most of the issues, especially on the monetary side, because we as the central bank also decreased the repo rate by 2.75% from March to September. So this was in an effort to try to encourage, lending especially to MSMEs. In terms of, I think the mobile money issue, we also, as the central bank, and increased the limits from 4,500 per day to 15,000 emalangeni. That was to ensure that whoever is transacting, especially the SMEs, would be able to maybe secure their orders, as well as pay their clients, especially the issue of salaries that has been a new phenomenon for Swaziland, because most of the salaries are now paid through mobile money, as well as other business expenses. On the BOP or exchange control measures, there was not much that was actually done on that line. It was mainly the issue of the monetary policy under the central bank. But generally, on the fiscal side, the government of Eswatini had, I would say, a post-COVID program or intervention, whereby the government had 4 themes, especially directed to the youth, the women, and SMEs and businesses in general. And the government, through the Ministry of Commerce, actually initiated a revolving fund or a capitalization of 45 million malangeni to the business sector. We, as the government of Eswatini, are aware that most of the businesses are informal, especially women businesses. So on that capitalization, there was 5 million that was apportioned or allocated to the informal sector. In terms of financing, we have various financing models directed to the youth, as well as women in general. There is a youth fund which actually tries to assist the youth businesses, regardless of the gender segregation. It was a government initiative. It assists the youth within the age ranges of 18 to 35 years to actually come in into the economy to try to start economic activities to try to, reinvigorate the economy of Eswatini. But of course, we are aware that there were challenges, especially during the COVID time, whereby due to the lockdowns, a number of businesses were closed down to try to, align with the government initiative to try to reduce the impact of the pandemic. A number of businesses after that were, closed down, and according to a survey that had been conducted in July by the Youth Fund, most of the businesses are not going to be able to be resuscitated, especially because there were fixed costs that they were to pay, like rentals, yes, especially rentals, which are always there. And the issue of loss of income impacted especially on the workers. And the government had not yet finalized the program in terms of trying to assist the Youth Fund to try to source funds to maybe try to resuscitate most of the businesses that closed down. I think on the I think I did touch on the structural adjustment part. Yes. But of course, it's a main, it's a very important pillar.
Yes.
Because the mobile money or maybe internet banking that is currently the buzzword, it's actually helping a lot of these businesses to try to disperse, to try to pay their creditors, as well as to try to source materials wherever they are sourcing. So from the first presentation, I would say it's a very, very important initiative.
Yes.
The DFS
Thank you.
program.
Thank you, Gcina. Thank you so much. I think we have a good kind of mix up between the monetary, structural, as well as the fiscal. So I think this is from the regulator perspective. We also want to know more because we also have some questions here, but I'm going to take it later on the role of stakeholders in facilitating on the impact. So can I also ask Natalie first to start on my first questions? Natalie, over to you.
Thank you, Nick. Can you see me?
Yes. Yeah. Wait.
And can you hear me very well?
Yes, I can see you and hear you very well. Thank you, Natalie.
Okay,
Proceed.
good. Thank you. Thank you very much, and good afternoon or morning, fellow panelists, the team from AFI, but also all participants to the webinar. And maybe before I answer your question, Nick, if you allow, I'm just going to give a quick background on MasterCard Foundation and our work in Africa that will allow to explain the different interventions that we have run over the last few months. So MasterCard Foundation is one of the largest private foundations in the world with mission to advance learning and promote financial inclusion to create an inclusive and equitable work. So the foundation was created in 2006 by a gift of share of the MasterCard Corporation but it's today completely independent, a completely independent organization with its own board and own director and management. The foundation is headquartered in Canada, Toronto, and our work is predominantly in Africa, where we have opened 7 offices in Ghana, Kenya, Rwanda, Nigeria, Senegal, Rwanda, Uganda, over last year, since the implementation of our Young Africa Work Strategy that was approved in 2008 by our board. And the strategy aimed to enable 30 million of young people, young Africans, 70% of them being young women, to access dignified and fulfilling work across the continent by 2030. So obviously, the focus area include MSMEs and youth enterprise, but also agriculture, digital technology, education. In April 2019, like 2020, sorry, like many organizations, we had to respond to the COVID-19 pandemic. And we launched the COVID-19 Recovery and Resilience Program with 2 main goals. The first one was to deliver emergency support for health workers, first responder and students with PPE and different or even small stipend for students that were out of school. But secondly, to strengthen the diverse institutions that are at the first response of resilience and recovery of our economy. So these include university, financial services provider, business, MSME, startup, incubators, but also some government agency, youth organization, and NGO. So over the last 7 months into the launch of CRP, we really had an upward in terms of programming, and we have onboarded 90 partners across the continent, predominantly targeting MSME owned and led by young people and women. What is different in our intervention to other rescue funds that we've seen emerging across the continent is that we deliberately focused on the young people and the young women. This means the informal sector. Because we've noted and we've seen that a lot of the government's funds and rescue package were not eligible for those type of enterprise because of the difficulty to just identify them and target them. We have launched 3 programs, one in Ghana, one in Senegal, and one in Kenya. And those programs have a funding component in addition to a technical assistance component. Under the funding component, we are partnering with NGO and different financial institutions, being banks, but also microfinance and even fintech in some extent, to provide either loans or grants to those enterprises. Because we also notice that a number of youth enterprises are just fallen out of the economic system and needed to be rebuilt to achieve a certain level of sustainability before being eligible to any form of loan and credit. In terms of technical assistance, we are focusing on basic business advice. You know, how do I keep my business afloat? What type of cost do I cut to survive the pandemic? But also supporting those enterprises to digitize their operation. The second level, in addition to those rescue funds, have been the support of innovation. What we've noted in the pandemic, it's really the creativity of the young people was impressive. We've supported a number of challenge funds and competition where we've seen young people providing solution in terms of PPE, but also digital solution to the crisis. So we've worked with a number of incubator and hubs to support those initiatives. The third level in terms of youth enterprise and MSME We have just entered into a partnership with BFA. Some of you might know BFA, to scale digital commerce, some digital commerce platform in Ghana, more specifically. And for us, this will be really a pilot, but also a learning opportunity to understand how we can really scale digital commerce and provide access to new markets to those young people. Mm-hmm. Youth enterprise and MSME, as everybody has seen on the panels, are core and important to all African economy. There's still much more to be done, but those are, we believe, some of the initial, I would say, initiatives that will support those enterprises to recover from the pandemic.
Thank you. Thank you, Nathalie. Thank you, Nathalie. We'll come back to you with some of the questions from the participant. So yeah, can I come to Finca now? Maybe Karen, you want to add on the inputs from the market perspective, so especially from the implementer or FSP perspective. Over to you, Karen.
Wonderful. Thank you, Nick, and thank you to F for having us, as well as the other panelists and the participants. You know, when I think back to the pandemic hitting, Finca is based across 23 countries. We run 20 community-based banks across the globe. So I think for our African businesses, we had a slight heads up on what was coming because we had seen the lockdowns happen in our Euro, Asia, and our MESA countries. So we put together our COVID ops response plan, which really, I think at its focal point was making sure we were doing our best for our customers as well as protecting them and our staff. Mm-hmm. Over the last 2 to 3 years, we've made substantial investments in our digital channel. So one of the big initiatives that we did was a combination of, as we were going into lockdowns, we took all our call centers remote. So we managed to get all our call centers set up so our people could work from home. So our customers still had a level of contactability with us. In a number of our countries, we actually had to close down our branches. So the agent networks where we partner with the MNOs as well as our own agent networks were critical. The other element which I kind of pushed us all to be ready for was a potential run on the bank. It was something I had expected our customers would want access to their money. So it was ensuring that we had the adequate liquidity available as customers could get to places where cash was needed. I think what I found so interesting in the pandemic and across all our countries across Africa was we actually saw the complete opposite. We saw the number of our digital bank accounts being opened, our savings accounts opened, doubled. In the DRC Congo, where we would normally open about 30 new savings accounts a day, that's been at 60 since the pandemic, and we've kept it at that rate over the last 6 to 7 months. And what we also found really interesting was that the average balance that our customers had saved with us actually increased. So there we've gone from the $9 to $10 mark to the $16 to $17 mark that people are keeping with us. And I think certainly for me, what I took away from that is Finca was very much seen by our communities as a place of trust for their money, as well as a place of access for their money. Our then next biggest piece was understanding our borrowers and where they were at. We had to very quickly put policies in place to give people payment holidays, moratoriums on payments, as well as kind of loan renegotiating and new terms. I think across the network, we've had to do that for about a third of our borrower base. What's been very interesting in Africa, in different markets, we've seen a different level of resilience. So I think in the Congo, we've only needed to restructure for about 12% of our MSME borrowers, whereas somewhere in Uganda, we've had to go closer to 50%. One of the next things that we did, which was really interesting, is we actually did customer survey to really understand through our remote call centers where customers were. The full survey from all our countries is available if anyone wants to see the detail on our website. But for me, most probably the hardest moment in this pandemic, the first country we did was Uganda. And the day that I actually read kind of our customer feedback and the impact it was having on their lives and their businesses was the first day in the pandemic I actually had to sit down and cry because it was heartbreaking. About 90% of our customers' businesses there, and I'm sure everybody will remember Uganda had a very, very severe lockdown. About 90% of our people were saying that they were battling to meet their daily needs, with the majority of our urban customers having to send their children back to the rural areas. And we were actually seeing a number of them having to skip meals and get down to one meal a day to be able to keep their cash flow and the responsibility of what they needed. And I think that was just a really heartbreaking and reality moment. I know all of us through this pandemic, it's changed all of our worlds in some shape or form. But, you know, I'm sure not many of us on this call are having to miss meals to be able to get through. One of the other things we did through one of our shareholders is we do have a FINCA emergency response fund. So one of the other things as we got through our customers and as we got through how we were going to keep our staff safe through this pandemic and keep serving, a lot of communication to customers on how do they avoid our branch channels, how do they use call centers rather, how do they use the online services rather. There we've seen a huge uptick in that. One of the areas we have struggled with in a few of our countries is when a customer needs to restructure, our regulators say that they have to come to the branch and they have to physically sign. So certainly an appeal to regulators, if we can introduce electronic signature, it does help keep everybody so much safer. And I think the other big thing which we had to do, which our corporate finance team did, was restructure our own funding and get our lenders to roll over, because obviously as our customers are struggling to repay us, you don't have the cash flow, A, to meet your loan requirements, as well as to keep on lending. One of the things we did have to do that has impacted customers, particularly new customers, is a level of deleveraging. So certain sectors where we're seeing customers not being able, and these are particularly travel, tourism, the urban sector, the retail, the clothing, we've actually had to pull back lending into those sectors, whereas non-effective sectors and customers who've been with us for a while, particularly agriculture, we have managed to keep lending to keep those businesses going. And I think for us, one of the biggest concerns really is ensuring we fund and we keep the agri sector going, because I think with this pandemic, something we should all be concerned about is the food security. And how do we ensure that people have still got the funding that allows them input to be able to plant for the next season to keep our food production going. So hopefully that gives you some idea. You know, it's been a very, very busy 7 months, and we still have a lot of work.
Thank you, Karen. So great. This is all very compelling comments, you know, from the regulatory point of view, as well as the market perspective, where Karen also share you know, some of the life that FINCA touches, and Natalie mentioned more on the youth as well as the women-led MSME. So as our topic is on the sustainability and viability of MSME amidst this pandemic, I reckon there should be an alternative in doing things and look at things. I think some of our panelists have highlighted it before. The government can only provide assistance so much, but is it enough? As indicated by Mr. Norbert Mumba in his speech, the price of fiscal and other mitigation measure is huge and unavoidable, and significantly will increase in public debt to absorb an important part of the loss of income from MSME. Study shows digitalization and digital tools have proven that they can benefit MSME. The question now is, How do you see digitalization help MSME change their businesses model and surpass this difficult time? So maybe Natalie, you want to start first because you did mention about the youth and also programs on Nkusu programs, followed by Gcina and Revelian and also Karen. Over to you, Natalie.
Thank you, Nick. For us, this is really a key learning from the pandemic, is that any digital solution that was really addressing a need had the potential to be accelerated during the pandemic. We've seen digital enterprise really striving. And the beauty is that it provides immediately access to a market that goes beyond the country, the border of a country, to those enterprises. As we know, one of the key constraints of growth for MSME in Africa is really the fragmentation and the size of individual country markets. So a digital solution allows to, or digital platform immediately provide a global visibility. And what we're trying to do is really set up and work with different incubation centers to connect those youth enterprise to private investors in the Silicon Valley, but also see how we can support the regulators and the government in terms of having more favorable policies and regulation for startups, because a lot of those digital enterprise are startups. We're working, for example, with ECOWAS to identify the barrier and define a roadmap for the countries in West Africa to prepare a startup act, like we've seen in Senegal, for example, being one of the only country in the region to have a specific startup act for those type of digital enterprise.
Thank you, Natalie. So I think in between of panelists, I will take some questions. So hold your thought, Revelian and Gcina, and also Karen. So the first questions came from Shahzaret Al-Alawi. So the question is more on the, despite of the adaptive measures taken, majority of the MSMEs still need assistance to recover from their losses. And most of them reported that they don't have received any assistance from any stakeholders yet. So is there any comment on that? The first questions, maybe we can take few questions and then we can answer. This is the Shadrats from Al-Alawi from Central Bank of Morocco. Another questions, how could concentrations of financing women and youth could reduce the impact of COVID-19 on MSME sector? This is from Mutasim Muhammad. And the third one is, how can government identify the right MSME sector to be targeted with the scarce resource for relief? So I think these questions are intertwining with the questions that I asked before. So maybe we can have Revelian and Gcina to answer. First, Revelian, maybe you can answer some of the questions here on the concentration of financing women and youth could reduce the impact of COVID-19, as well as the how basically to balance between with the scarce resources that government have and to assist the MSME. Over to you, Revelian, first. Maybe Gcina, you can start if Revelian is not. Yeah. Revelian, you on mute. Can you unmute yourself?
Hi, Nick.
Yes, Revelian, over to you.
It's Gcina.
As Gcina, okay.
Yes.
Okay, maybe because Revelian, okay, Revelian first, and I'll come to you, Gcina. Over to you, Revelian.
Okay.
Okay. Regarding the first questions.
Yeah, the first question. on the concentrations of financing women and youth MSME to reduce the impact of COVID-19. What is your comment? And the second question would be on how the government juggling with the scarce resources and giving the relief to MSME.
Sure, this is a very good question. What I can comment on that, I can start with the second one.
Yes, please.
Which say that, okay, there is a scarce resources.
Yeah, scarce resources.
Scarce resources. And when we want to make sure that we are able to move from COVID-19 impact through the women and the youth, it is a matter of priorities for the government and the other agencies which will be embarking on how to make sure that MSMEs they are able to get necessary fund, and that will be in line with the available infrastructure through the government, which will enable that the allocated resources, they are able to be channeled through productive and safe areas where we are sure that the resources used will be deployed or will be used effectively without being wastefully. And the other areas apart from that one is to make sure that maybe there is a certain incentive to make sure that whoever who is engaged on that activity is able to penetrate or to go through his initiative or his ambition.
Mm-hmm.
For the first one, can you come with it again? I didn't.
Yeah, the concentration on financing women and youth could reduce the impact of COVID-19. How's that so? So
the concentration.
Yeah, so by having like a specific fund for women-led MSME and youth, so how does it, mitigate the impact of COVID-19?
As we were discussing,
yes,
apart from the opening remarks which was given by Mr. Norbert, the large percentage of that sector is controlled or is being held by the women and the youth. So we think that if we channel the funds through women's and the youth, we will be able to make sure that the COVID impact is reduced or is minimized to the extent that the business which is undertaken by those groups are able to stand on their own. And also we can design certain policies which will protect their business or their access to the market. Also, we can find ways to make sure there is several initiatives regarding obstacles which is sometimes have been hindering the flourish of the sector is in two aspects. The first one is regarding the market access, which is very crucial. And once we provide them with funds or capital, we are sure that through the government initiative, we can nurture them to make sure they are able to access the market, they are able to have a business planning, to keep their record, to have a taxation systems, also to have maybe export strategies which will improve their business.
Yeah, thank you, Revelian. So meaning that, the intervention should come not only from the supply side, but also from the demand side in mitigating those things. Yeah, thank you so much. Maybe Gcina, you want to add something because you were on the line just now. Gcina, over to you.
Thanks, Nick. Probably I will start on the issue of scarce resources Yes, of course, we are all aware that our governments have challenges in terms of securing funding, especially for the various sectors that they are that they are supposed to support.
Yes.
But in terms of trying to maybe assist government, I think public-private partnerships could be one of the initiatives whereby the private sector, maybe like co-ops, pension funds, insurances, command a large amount of capital. I think they can come on board to try to assist government in trying to fund most of the initiatives, especially women and youth-led businesses, as well as the issue of that Felix touched on, the issue of incentives. Probably government should try to have tax incentives, especially for those private sectors that are mainly involved in funding the youth and women-led enterprises. On the concentration of financing towards women and youth-led businesses, in our case, the government came on board with, I would say it's a grant, interest-free loans to a value of 1 million, especially because most of the women are involved in informal businesses. So there is a certain funding that is directed towards that. Another maybe intervention could be the use of guarantee schemes, whereby when banks are funding women and youth enterprises, maybe guarantee schemes, because these businesses are, especially the youth businesses, are more risky. Maybe to cushion the lenders, the guarantee schemes could be used as an intervention to try to reduce the risk of lending by the banks or whoever is involved in financing, especially even the development finance institutions.
Yes.
I think that would be all for now from my side.
Thank you. Thank you so much, Gcina. Sorry, I muted myself. So I want to ask the first question maybe to Karen and also Natalie. Maybe Karen first. How would you see that, the assistance from stakeholders is not being received by people on the ground? So what is your comment on this thing?
I think firstly, it's just to understand where capital flows normally come from. So most of our kind of international and commercial funding comes from Europe, it comes from America, as does a lot of our grant funding. And certainly there, what we're seeing is a lot more internal focus because they've got their own challenges on the ground, as well as we've seen a lot of the grant funding prioritize first the medical equipment, the PPE, the vaccines, etc. So I think it's giving them a little bit of time to kind of work through the first phase to then come to the second phase. Certainly what we've seen in terms of our client research and what do they need, a lot of our particularly women need not the traditional SME loan of like the $2,000 to $5,000, but they actually need that starter finance. I'll give you an example of a customer who's running a bakery. They've got all the equipment, but what they now don't have is flour and all the goods they need to start rebaking the bread. So, we've looked at the majority would need a starter loan around the 500 to 800 mark to re-get their business going. which then would enable them to both make that repayment as well as their traditional repayments on things that they finance, like their equipment. But the biggest thing is finding the sources of funding, which both Gcina and Revelian did speak to us about.
Okay, thank you, Vera. Natalie, you want to add on the stakeholders' interventions?
Not much. Maybe to say that one of the difficulty in it's really targeting also of those MSMEs. As I mentioned, a number of them are in the informal sector. Some of them don't have information to the different relief funds that are available to them. So there has to be a really deliberate effort also to communicate to those MSMEs.
Thank you, thank you. So yeah, I want to come back to my earlier questions to Revelian and Gcina, especially from the regulator perspective. How would you see digitalization? Because you did mention earlier, you know, about contactless and digital payment, and then, you know, some intervention through MNOs. Maybe Revelian, you want to add first on how things are going in Tanzania when it comes to digitalizations?
Yes, sir. In the area of digitalization in Tanzania, I can say we have. Hello?
Yes, we can hear you. Yeah, we can hear you clearly. Yes. Thank you.
We are in a better position. That comes from the approach which were used in our national financial inclusion framework, which started its second one, 2018-2022. There is a directive, or there is a requirement which comes or goes in hand with the improvement for infrastructure related to digital services, so that we make sure that most of our transactions, most of our activities are computerized, and we are able to access financial digital services. So, as indicated also in the presentation from Voda, for Tanzania, we are almost having more than 44 million people having an access to internet services or financial services related methods in digitalization area. So we are doing better because most of the people are able to access e-banking. They can deposit their money from mobile operators to their bank account, and this is in line with what we have been able to facilitate through national financial inclusion framework in Tanzania.
Thank you, Revelian. So, Gcina, it seems that Revelian mentioned things from the, from the framework itself, like how digitalization take place. So, do you think that, with these supply interventions of digitalization, it could also help MSME to change on their business model and, surpass the difficulty? Because most of the interventions coming from the supply side of, like, the payment side or digital financing. So how will you see in terms of, like, from MSME itself, how do they rebuild or remodel their businesses due to this pandemic? Gcina?
Thank you, Nick. In terms of remodeling, I would say currently through the mobile money or the mobile network operators, it is that platform. It's actually trying to enhance digitalization in terms of saying if you have a mobile phone, not the smartphones, you can actually transact to do payments, and you can still access the mobile money through your ATMs. That is, in terms of the current infrastructure in Swaziland, it's ATMs, the mobile money networks are very important in terms of trying to push forward the agenda of digitization. And especially the youth, they are coming with very interesting products in trying to enhance digitization. So it is very important, especially for regulators, to have these services
Thank you.
being tested properly.
Yeah. Thank you, Gcina. Yeah. So anything that you want to add, Karen, looking from the FSP perspective, maybe like, you have a new fintech, or you have a new kind of like business model that MSME offers. Over to you, Karen.
So I'm going to share an example, which is the proof of concept we've been running in Tanzania.
Yes.
It's a partnership between ourselves, Vodacom, and a technical partner called Kunda. We, I think, as we were going into the pandemic, started a proof of concept to solve the agent liquidity problem. So we all talk about mobile and digital financial services, but we well know that I think it's something like across 40% of our customers, when they want to deposit or withdraw cash, they get to agents who don't have the e-float available for them. So working together with the regulator, the Bank of Tanzania, who gave us permission to do the proof of concept. It was something very new, providing an overdraft to the agents so that they could keep continuing with their e-float. They didn't have to close their business. They didn't have to get on transport and get to a bank to do the cash in and to buy more e-float. Every step of that way, keeping our regulator informed with the control point and the reconciliation points, as well as working very closely with the other two partners. What we did do in that POC is I think we dispersed $2.2 million. And most probably the best part of the whole project was that we saw our agent commission income increase by 40 to 75% because they were able to keep their businesses going. So I think that's a very good example where you've got M&O working with banking partner, working with the fintech technical partner, as well as working with our regulator to be able to test something that's new. And I'm very happy to say we've recently just got permission from the Bank of Tanzania to be able to run a full commercial launch now of the product, which is very exciting. And we're certainly looking to take that into a number of our other African countries.
Thank you. Thank you so much, Karen. I think one of the questions that we have here from Mutasim Muhammad, I think we have answered it because most of the policies that we mentioned is more on future contingency plan, but rather not on the current situation. So how to mitigate the current impact? I think a lot of our panelists have give examples on what have currently been done by regulators as well as the market players. Okay, so allow me to move. Is there any other questions coming? Okay, so questions for Karen Brock. So Karen, there's a question for you. Your model is quite impressive, but did you get any fraud cases, and which they a result of looseness in the implemented technology? So Karen, maybe you want to take this one?
I'm assuming that's together with the Hapa Cash case study. So I'm very happy to say no fraud cases. We also had pretty much full repayment because of the way it's structured. We either take repayment from the agent or it comes off their month-end commission payment from Vodacom. So we've had less than 0.1% of bad debt on this particular product.
Okay, thank you so much, Karen. Okay, let's move to my next and final question from my side. So these questions applies to all panelists. As we move into recovery stage, so we have done with this mitigating emergency stage. What kind of interventions would you be useful to assist in sustainability and viability of MSME, including women-led MSME and young MSME? And what are the key challenges specific to this segment that we should keep in mind when developing the policies for recovery stage? So this question is basically for a recovery stage. And do we also consider green measure beyond COVID-19 recovery? So if there is any measures that incorporate the element of green technologies or green interventions. So any of the panelists would like to take this question first? This interventions is more on the recovery. So we've done with a lot of like fiscal, monetary. So basically what's next? I think we can also focus more on the structural as well as on other demand side interventions. Anyone want to start? Natalie, maybe? Any comment from your side?
Not so much. I prefer to hear my other colleagues I think the answer will be more. Yeah.
Okay, sure. Maybe we want to hear from regulators. Gcina or Revelian, you want to take this one first? What is it that regulators are seeing in terms of like the recovery stage?
Thanks, Nick.
Yes.
I think the impact of COVID has been so dire to MSMEs, and probably the issue of moratoriums in terms of trying to restructure and extend the term of the loans would maybe try to assist the MSMEs in terms of cash flow, whereby they would use the available cash to attend to the immediate needs of the business rather than focusing on paying the installments. So like in our case, the banks have requested under the guarantee scheme to have a 3 months to 6 months moratorium for some businesses. Currently, we have 16 requests that we have approved to the value of, I think, 3 million. Yes, I think the issue of loan installment payment holidays.
Thank you, Gcina. Revelian, you want to add anything beside moratorium and making sure the liquidity of MSME? Anything maybe that you want to add on it? Do you have Revelian? Okay, maybe we can. You on mute, Revelian. Sorry. Can you unmute yourself?
Yes, I can.
Thank you.
Can you hear me?
Yes, we can hear you now.
Maybe what I can think we can consider or try to establish through our financial institutions, if they can, not all of them, they have a special window to deal with the MSME, but we can try to consider if it is necessary to make sure that maybe our banks are able to have a special window which will provide services or product which goes in line with the MSMEs activities or business oriented issues. Also, another area which I wanted to share, maybe if it seems proper, is to be considered also on the consumer protection policies, which is necessary to make sure that both sides are well protected and covered during their business. Yes, sir.
Thank you. Karen, you want to add anything on this? In terms of the recovery stage, what is it that that we want to add more in terms of those measures that we have?
So
Karen?
absolutely, the assistance from regulators, I think I mentioned earlier, being able to accept electronic signature or voice signature. We found that particularly hard for restructures where customers have to come in and physically sign. Thereby exposing them while they're on transport as well as within our branches. I think also from a green perspective, being able to get rid of all paper would be very useful as well. Certainly KYC Lite to open accounts, particularly for our small savers. As well as I think accelerating the use of agencies and our abilities to plug into the agents to allow more interoperability of funds going through those channels would be very, very useful and certainly help accelerate more financial inclusion as well as doing it in a greener way.
Thank you so much, Karen. So I think it was a good kind of stages of interventions when we discuss about from the part of emergency to the current or during pandemic and also post-pandemic or during the recovery stage. So do we have any other questions coming from the floor? Not so far. Okay, I think we have exceeded the time. So if there is no more questions, can we do the last round of the, okay, there'll be no questions more. So is there any other, comment that any of the panelists want to add before we end on our webinar? From Natalie, Karen's, Revelian's, and Gcina?
From my hand, just to restate the importance of supporting youth enterprise, and especially women-owned enterprise, even more now than before the pandemic, because the reality is that they are the most affected by the pandemic. And also one call to the regulators to really also support the microfinance institution, because they are the closest to those to this customer base, and they themselves need to be supported with different liquidity measures through this crisis. Thank you.
Thank you, Natalie. Karen, before we proceed with the regulators.
I think maybe just to add to Natalie, the great ending comment is we only solve this by really all working together. It's the combination of all the different people represented here working together that is really going to get to that end customer that we all want to support and need to support.
Thank you, Karen. So last but not least, these two regulators. Maybe we can start with Revelian first before Gcina. Revelian, your end notes, any final end notes? You're unmuted again, Revelian. Or maybe we can go for Gcina first. Yes, Gcina, maybe you can take the floor first. Okay.
Okay, thanks, Nick. On my side, I would say we can have policies in place or maybe proposed, but implementation is very important. You would want to assist the vulnerable groups, as well as the MSMEs, but of course, every policy or intervention or program needs to be implemented. I would say there is also the issue of knowing who you are going to be, targeting your interventions to. It's very important for our government to have a data. So data collection is very important, as well as the networking that is taking place, especially such webinars. They are very important to try, to assist the partners across the globe in terms of issues that needs to be tackled, especially for the women and youth. Capacity building is very important also. Yes, we cannot only target funding to businesses that are not well capacitated. So capacity building is very important, as well as those products that we develop as maybe financiers. We need to look at our target group and build those appropriate financial products. I think on my side, that would be all. Thanks, Nick.
Thank you. And last but not least, Revelian.
Thank you, Nick.
Yes.
And, most of the areas has been covered, but what I think maybe it can add value is to consider going forward if the government can have a special arrangement, making sure that they can provide a subsidy, but without making interference or making market distortion. It may help to make sure that we are able to lift those two groups from maybe the level we are now to higher level if we get a subsidy which is well organized and it does not cause imperfection regarding the operation within the market fair play.
Yes, thank you. Thank you so much, Revelian. I think with that note, I would like to conclude for today's webinar. Thank you so much. I think if I can do call for all the participants to give a round of applause to all the panelists, applause, I think, to all the panelists. Thank you so much. So the key takeaway for today is this is basically the conclusions. So dubbed as the Black Swan for 2020, the COVID-19 has been the biggest impact on the developing and emerging countries, which is the backbone of the countries, MSME, including women and youth MSME, and government and the relevant stakeholders have taken all the concerted measures to mitigate the impact of COVID-19, risk balancing between the economy and health. We understand that, through the discussion that, there being a scarce resources, and then how we should, make sure that these resources have been going to the targeted group to make sure that, we could assist them, particularly the micro. And from sustainability and viability perspective, measures should be a living policy, focuses on access to finance, leveraging on digital and targeted to women and youth, which is the bulk of MSME at both micro and macro level, backed by a solid monitoring so that they can be maintained, adjusted, or phased out as appropriate. So with that note, I would like to conclude today's discussions, and thank you again for attending today's webinar. Thank you for your participation.